All right, guys, welcome to this lesson. So in this lesson, you're going to be looking at how to calculate pips on gold, so that in all your goal setup, you're going to know the amount of pips that is at risk and the amount of pips that you're targeting in terms of take profit. And most especially in this lesson, we're going to be looking at how to use the proper lot size on all your goal setup, so that if on the event that the trade goes against you, you're not going to lose more than the stipulated percentage of your account. You're willing to lose for that very setup. So guys, let's get to it. We are going to be using TradingView for this very lesson. If on the basis of analysis you want to buy gold at this level, right? Want to buy gold using this sort of block to buy gold. So if you're entering gold buy here, you're going to use this long position. We're going to be using, this is 5 minutes time frame, and our stop just below the zone. Okay, so let's just a little bit below the zone like this. Okay, and let's say we are targeting this liquidity here, this previous high. All right, if you click on this setup, right, you're going to see this long position has all the information we need to know the pips that is at risk, and to know how many pips you're targeting, and know how many pips you're most likely going to lose if this trade goes against us. Now, if you look at this red zone is telling you about the risk. So there are actually 3 important numbers, but there's only one that is very useful for us here, this very center one. So by default, TradingView measures the pips on gold on points. You are saying 305. So this 105 points. To know the pip, you're going to divide this value by 10. So 305 divided by 10 is going to give you 30.5. So the pips at risk here is 30.5. So this is our stop loss. Our stop loss is 30.5 pips. And in terms of target, this is our target here, the same value. This is 2109. So 2,109 points. Divide this by 10, you're going to get 210 pips. All right. So we are risking 30 pips, targeting 210 pips. That is what all this information is saying. If you look at this center one, this is talking about risk-reward ratio. Risk-reward ratio. So our risk-reward ratio on this trade is 1:6.91. How do we enter this trade? Okay, suppose we are trading a $10,000 account, and on this trade we want to risk 1% of our account. How do we enter this trade such that if the trade goes against us, we are not going to lose more than 1% of our account? In this regard, 1% of $10,000 is going to be $100. So we don't want to lose more than $100 on this trade. The very first thing I do is I'll go to this website. There are a lot of ways to go about it, but the website I go is cashbackforex.com. And once you're on that website, we're going to look for gold. All right, you search for gold, you click on this place. Here you search for XAUUSD. So this is the popular one. You click on this and definitely it's going to pop out. So if your base account is in dollars, that is your currency account is in dollars, you leave it at this default US dollars. If it's in pounds, ensure you put it in pounds or yen, put it there. Then this is the entry price. Entry price, we're going to go to the setup and pick it. And this is our stop loss. So go back to this setup and say the entry price is 2316.84. So you're going to put that value here, 2316.84, right? And our stop is 2313.79, 2313.79. Okay, then this balance is 10K, our long size, balance 10K, risk is 1% of account, that's what we are risking. So this lot size, this contract size is very important because it varies with respect to brokers. So you need to go back to your broker and check the contract size of how to value gold. Our currencies is uniform across all brokers, but when it comes to commodities and indices and the rest, it varies. So you need to go and check the contract size of your broker. So to do that, the broker I'm using a 10 trade. You straight go to 10 trade platform. You're gonna go to gold. This is gold. So this is gold. You go to gold. Click on gold. All right. Once you click on gold, you right click on it. You go to specification, contract size. You can see the count. Their contract size on gold is 100. If you're using mobile, all you need to do is you go to quotes, click on gold, click on symbol properties, and you're going to see contract sizes. This regard, we already know this is 100. You close it and you go straight to our position size calculator where we are. So we're going to leave it at this default 100. Okay, you click OK. So you can see every information we need to make this trade happen has been displayed. So this is the lot size we're going to use for this trade, 0.32. And the units we are going to be buying, right? Units we are going to be buying is the 2.787 units, right? That's the trade size. And the amount at risk is $100. So if an event this trade does not work, we're going to lose just 1% count in this trade, which is just $100, right? So guys, make no mistakes again about calculating your lot size on gold, and don't blow your accounts on just one trade because you took the trade on the wrong. So see you guys in the next one. Cheers.